All right, so I want an example. I just want to give an example of a trade that we know wins. And this is for the guys that are chasing massive trades and want to pass evals in one day and over leverage positions. All right. We know this trade wins. We actually, this is like a plus setup. We get a bounce off the FLB, right? Beacon comes into the zone, pushes up. We get our candle color flop. We get a push, and we get a buy signal from the FLB, right? So if you were perfect and took that buy signal right at the close of this candle, it dipped down 21 ticks, right? 21 ticks. Well, if you're using one mini, that's $110 of drawdown right there, right? If you're using 5 minis, that's $560 in drawdown right there, right? And then obviously it runs and comes back up and you get your tick, you get your ticks. Guys, this is a 1 second part. Okay. 1 second chart. Do you think you're going to be that accurate watching this and slamming a button and it all filling and everything happening right at this split second? No, you're not. You're probably going to get filled up here somewhere, right? That means your drawdown is going to be at least this low. That's where you're going to want to put your stop, right? That's 122 ticks, right? That's even if you like, you just Mac Daddy at clicking the button. I mean, this is triggered 1 second and then 1 second and then 1 second. And it might take you 3 or 4 seconds to realize you need to click the button, which puts you up here, right? But your stop loss has got to go somewhere. Like if you put your stop loss at 20 ticks, well, that's just this right here. You know how easy that's going to get wicked out, right? So you gotta think about your leverage. Now, if you buy 2 or 3 mini or micros here, right, and you put your stop down here, well, that's 150, $160 a drawdown if it comes all the way down here, and you hit then you go for a 2 to 1 or something, right, which is like up here somewhere. Well, you're making like 250, 260 and you're risking 150, 160. Or if you're just scalping, then you're hitting your 80 ticks or whatever. And if you're running 2 micros, that's $80. If you're running 3, that's a little over 100. So, and you just do 4 or 5 of these a day, and you made your money. You don't have to throw minis on these trades. Look at this. This is one. This happened at 10:30. Then we just get, we just are patient. Just wait for another really good signal. Right? There's another end cap. If you're just going to trade end caps, there's one right here. This one happened and all you got to do is come every 15 minutes and look, the start of a 15-minute candle right here, 11, 30, and 20 seconds. You got another signal that was a good signal. We got our beacon line that busted into the end cap, came out, and the buy came, right? And then you're delayed, whatever, you click right here. And then you get your 80 ticks. That's another 120 bucks, whatever it is. It's 80 plus half, so $120. Just using 3 micros, and you risked 73 ticks, right? So, and then we're gonna just look for another one. Does any of those touch? Nope, they don't touch. Okay, here we go. Here's some. I got them marked out. So this one, this first one would have got you if you're putting your stop loss at your low here. So you would have triggered this, and then you would have gotten stopped out right here, right? This one, I don't know. This one you might have entered too. It might have got out twice, but this third one was a good one, and it kept going, right? and that's just the name of the game. But if you're trading it like we trade our bounces, this one right here, you would have got in at, I don't know if I would have traded this with this zone so close, because that's what's causing it to consolidate, right? I might have just not traded this. You got to have some discretion, but we'll just say that we did, and we traded the rejection. You know, you would have got in wherever you're getting in for whatever reason. You got into this one right here. Your stop's got to go down here, right? Now, when we do these types of trades, I'm risking 250 with micros. So this stop down to here is 250. So you have to figure out your position size to be $250 with 113 ticks of drawdown, and then you just go 2 to 1 on it, and there's your $500, because you're risking 250 and you're making times 2, so $500. And that's that. Now there's indicators out there you can get that will do this position sizing for you. You just put in the dollar amount you want or percentage and put your stop loss where you want it to be, and it'll figure it out for you. But all right, so this is another end cap rejection right here. This one actually works out, but again, it's so close to this, I probably wouldn't take it. I would be more apt to take I wouldn't take it. Just wouldn't do it. That should probably be a rule in your book, is if you're that close to it, like, look at, we're close. We're like 40 ticks away. Now this one right here, if this would have bounced, we're 100, we're within the ticks of 80 ticks of getting our TP, right? This one right here is bouncing off and rejecting into 40 ticks. It's at that point, it's just not even worth it. So that's your risk to reward. Now this end cap is still valid because it wasn't wiped out. So we would just have to extend it ourselves. And if you look, this one drops and actually does what we want it to do, right? And if you measure from here to here, we're way within our range of our take profit of 80 ticks. So this one is worth taking, and you would get in, and you would get in about here, and then here's your 80 right there, right? Or 100, or however many ticks you're going to go for. I like 80. 80 seems to be a really good number that gets hit. Now, this is not, so if we do this, since this didn't get wiped out yet, wait for it to pop up, there it is. Since we're using 1 second, these can only go over 500 bars, so we have to just extend it. And these are good signals. But did they win? I don't know. Yeah, they probably won. So you would have ended up taking this one right here, putting your stop here, and we're going up. Yeah, 80 ticks. You went into some drawdown. You went into 53 ticks of drawdown. But it ends up winning. And it comes up and actually taps into this bearish end cap here. And does whatever it does. I don't know. But let's get out of this. I don't want to lose my spot. Quick. And then there's our line. But I'm just showing you all the possibilities of when to get into these trades and when not to. And I'm just using regular candles right here. I like the Renkos, but I just wanted to show you guys like the importance of your position sizing. Like, you can't just go ham on all your contracts. Now here's another rejection of that end cap. It still hasn't been mitigated, so it's still valid, because you get a buy signal right after it double dips into it. Dips down, it comes up, dips down, comes up. That's a valid buy. So we're buying somewhere around here, and do we get 80? Yes, we do. Boom. And so that was like, well, how many did we get? Like 4 or 5, and then we had 2 losses if we took those. And it's just, you keep getting more and more. Like, here's another one right here, right? It goes up, you get your ticks out of it. Here's another rejection right here. Boom. It does go up, you wouldn't get stopped. Let's see, here's another one right here. It's rejected off this zone, and that one you're going to get your ticks. So you're going to be profitable even on a choppy day using this system. You gotta think about what you're doing, and if you should even be entering the trade or not. Now this thing wicked all the way up over the top in 1 second and came right back down to around here. But we're at 420 on a Friday, so we're not even trading at that point. So I just wanted to show this video for everybody so that they could understand like position sizing and drawdowns and stop over leveraging, because even on a 1 second chart, you can still go into 20, 30, 40, 50, 100 ticks of drawdown after an entry. You're never going to get just a blatantly perfect entry. Well, you can, it does happen. You're not going to get it the majority of the time. The majority of the time, you will have retracement. Even on a 1 second chart, you will get into drawdown. And look at this. This one is a perfect entry. This is not the majority, right? No, it's not. You even go into 12 ticks right here. On the next candle, 1 second, it whipsaws up and down 12 ticks, and then it goes above your entry and never comes back down again. So 12 ticks, I mean, 10 ticks is $100 with 1 mini. 12 ticks, 110. So, and if you're running a 50K account and you're getting whipped, you put your stop loss at 10 ticks. Okay, well, you wonder why you're getting stopped out all the time. Well, I'm showing you right here. You have to position you have to size your positions so that you can accept some drawdown. Right? Hope this helps.